Hi guys, Commerce with Matt here, yet with another video. October-November 2021, 7707 paper which we are going to do the last and the final question, fifth one. Before we move on to the content, just to remind you, Commerce with Mac YouTube channel is a YouTube channel which delivers accounting, economics, business studies for Cambridge and Edexcel students, and also provides a lot of career guidance knowledge for any person who is trying to focus on their jobs after their exams. So let's move on to the video and let's solve the question number 5. So in this question, I'm going to do a depreciation sum, and this is the last question. I have done already question number 2, 1, 2, 3, 4. You can see the description and find out these videos. And if you wanted to know how depreciation is calculated, that particular link is also under this description column. So let's start the today's video. Simon, as a business selling office stationery on 1st January 2019, he owned 2 delivery vehicles which had been purchased on 1st January 2018. Whenever you are doing a depreciation sum, you need to know the dates specifically because dates are the confusing things. Delivery vehicle A had cost 30,000 and delivery vehicle B had cost 25,000. Simon uses the straight line method for depreciating the delivery vehicle. So it's a very easy one because straight line method. Straight line means you need to take your cost, multiply it into the percentage and get the value. If it is reducing balance method, cost, deduct the accumulated depreciation, get the carrying amount and multiply it into the percentage. So let me give the formula again for your knowledge. So there are 2 ways to find out depreciation. One is the straight line, other one is the reducing balance method. So straight line method, you can say it as SLM. You can take your cost and multiply it into the percentage and find it out. Reducing balance method, RBM, we can say, we can take your cost, deduct accumulated depreciation. For accumulated depreciation, another term we can use is provision for depreciation, and then you will get something called carrying amount. In that carrying amount, you need to multiply it into the percentage. So this is how you need to find out straight line method and reducing balance method. With that knowledge, we move on to the question and solve this out. We have Simon uses the straight line method for depreciating for delivery vehicles. A rate of 20% per annum is on cost is used, with the rate being applied for each part of the year for which the delivery vehicles are owned. Due to decline in business, delivery B, vehicle B was sold on 31st March 2020. And a check for $10,350 was received. Delivery vehicle A was still in use at the end of 2020. The first thing you need to know, when is the starting year of this depreciations, and like when is the ending year of every year of accounting. So like every year there's 1 year starting point and the ending point. Knowing this is very important when you're doing the sum depreciation. So it will be able to calculate, helpful to calculate the depreciation very easily. Here our starting year is on 1st January, which means our ending part should be 31st January. With that base knowledge only, we are going to calculate the depreciation. So the first one, they are giving complete the following accounts for each of the years ended 31st December 2019 and 2020. Balance the accounts at the end of the each year where appropriate. So they are given a 2019 Simon delivery vehicles account, which we will be drawing up in a while. Then we have provision for depreciation of the delivery vehicles account. We're going to do this also. And then they have given delivery vehicles disposal account. All 3 together, you're getting a marks of 15. So let's start scoring it. I should draw this type of adjustments because in exams you don't want to do this, but when you're practicing at home, of course you need to draw this and see, then it will be correct. And practice makes a man perfect. Always when you have time, practice as much as possible, because accounting you can only score by practicing as much as possible. So I'll open up an account for delivery vehicle. First of all, in exams you don't want to draw these formats they will give you. You should just do the calculation in the account itself. So I'll take delivery vehicles account. Then I will open up, what is the second account we have? We have provision for depreciation account. And then finally we have disposal account. Let's start with the first one, delivery vehicle account. Then you can see here, the first question they are saying that they are starting a balance on 55,000. So it's a cost account. You don't have depreciation to be calculated under this account. You can directly take this value and start doing it. From 2019, first they are starting the balances here. As there's no space to write the date, I'll make it a bit bigger, and I'll write here brought forward 55,000. Now on 2019 they didn't buy anything, so I'll take this as carried down balance at the end of the year as 55,000. I end up this sum. Because they're asking on the question 2020 and 2019 and 2020. So both sums should be represented under this account. Balance the account at the end of the each year where appropriate. So the same is adjustable. I think you should do the same 2019 calculation, 2020 calculation under delivery vehicles account and provision for depreciation account. So I'll move on to 2020. So I'm going to take a total here. Right. Leave some space when you're doing the sum. In both sides, I'll write 55,000 and 55,000. Then we have brought forward 2020 on January 1st. Brought forward is going to be 55,000. So here I should write the end of the year 2019. Maybe December is the year we are selling. So 31st 12. You can say like that. Let me see how they have started the sum. 2019 January 1. So I can say December 31st. The better way. Always try to represent what the examiner is saying. So I'll write here December 31st. I'll write 2019 January. So here also I can change the dates if I need. You don't want to specify like this Jan 1 or whatever the days, but I feel like if it is better always to teach you all the correct way, then you will not do mistakes in your exam papers. So now I'm going to move on to the 2020 year, and they're disposing this asset. You can remember that they're selling it off on 2020 because delivery B is a they think that the business is declining, so they need to sell vehicle B. So they are getting a check of 10,350, but then the cost is only the amount we should reduce, not the amount that we are receiving. So actually the cost of the delivery B vehicle is 25,000. So here I will write disposal. Remember to write disposal because I'm removing it off. So this 25,000 will come under what account? Under disposal account. So I'll erase this off and draw disposal account for understanding. To have a complete view, I'm going to minimize this. I hope you guys can have a complete view. I'll write here disposal account. And on the debit side, I'll write 25,000 transferred from delivery, which year it is getting transferred. 31st March, they're selling 2020. They're doing this. And they have said this the date 31st March. On the question itself, you can see here sold on 31st March, so 2020. So I took this date as a casual date under disposal account. From where are we transferring this amount? Under delivery vehicle account. So we can write either 31st 3/20 or 31st March 20. Whatever you feel convenient, guys, you can use the dates. And here I'll write delivery. So from where did I get this? From the delivery vehicle account. Easy as that. So I'm almost done with the sum. Now 25,000 I have recorded on disposal account, but here I have not. I forgot to write the date here. 31st March 20. Okay, so disposal. Now after disposing this amount, what happens to the delivery vehicle account? The value of the vehicle goes down, carried down balance 31st December. 31st December 20 will be the carried down balance, and you will have only 30,000 to carry down. So that is the value which we should represent, and they're asking. So they didn't ask 2021, they asked only 2020. So you don't want to show the brought forward on 2021. So here I'll write 55,000, and here I'll write 55,000. Simple as that, guys. We are done with the delivery vehicle account. Though they didn't ask, it's better if we can present it 2020 January 1st. What was the value that you brought forward? 30,000. So that gives a complete view of how much knowledge you have on the exam paper. So let's start with the second account, provision for depreciation account. So before we move on to the sum, we need to know the amount of depreciation for these two assets. They're saying in 2018 they had a starting balance. They started this vehicle in 2018, so they should have a balance because they're starting in 2019. You can see here they started with 11,000 balance. So I start on the credit side, 2019 Jan, right? So here I'll write brought forward. How much is the amount we have brought forward, guys? 2019 January brought forward is going to be 11,000. Now I need to find the depreciation for the account. What is the double entry for provision for depreciation? Depreciation account debit, provision for depreciation account credit. If you do not know the double entries and how to do it, the description, under the description you can find the link of depreciation. Even through whiteboard I have explained, or even through Excel I have explained. Both the teaching methods will be helpful for you to learn depreciation thoroughly. So now I need to know the depreciation of vehicle A and B. So A has a value of 30,000 and they are giving straight line method 20%. So 20 over 100 will give you every year 6,000 worth of depreciation. B is having 25,000 and 20% is the depreciation rate. So it will give you 5,000 every year. So that's how the 6,000 plus 5,000 has taken 11,000 on the 2019 starting balance. You can see here, how did I get this 20%? That's also given on the question. Here in this question, if you see here, 20% is mentioned. A rate of 20% per annum on cost is used. So we can take that as a consideration part. Here in 2019, I'll write depreciation at end of the year, 31st December 2020, 2019. Our depreciation. Okay. So I'll write here depreciation value. Both the values I can write 11,000 A and B, and finally I'll have carried down balance on 31st December 2019 as how much? 22,000. So I'll record here 22,000. Then take the total balance in both sides. Credit side is always higher. So 22,000. 22,000. I'm bringing this amount to the brought forward side as 2019 January 1st, 2020 January 1st brought forward will give me a value of how much, guys? It will give me a value of 22,000. I'm bringing the same value on carried down to the brought forward balance. So now this is the balance which I have taken from here to the next upcoming year. You need to transfer that balance to the upcoming year on the credit side itself. So now after doing 22,000, I have a problem here. For vehicle A, we can see the depreciation is 6,000. So I can take depreciation. Now I'm breaking it into two. Okay, but I'll write the date 31st December 2020 depreciation. So I can get here actually a value of 6,000, and then 31st March, because we are selling the vehicle in March, B vehicle, I can write 2020 depreciation. You don't want to write the specific name, but if you feel like you can write the name. I'll write depreciation, but then the depreciation amount is going to change for B because B is having 25,000. They're using only 2 months, so 20 over 100 will give you a value of 5,000, but into 3 over 12, because for a year there are 12 months, so they're calculating only for 3 months. You will get a value of, so here 5,000 into 3 over 12 will give you 1,250 as your depreciation amount. So now this depreciation amount, what happens actually, though you have calculated here 29,050, there's something happening. The disposal says that, but on that particular date when you are calculating for the 3 months, that 3 months calculation and the previous calculation of depreciation for the particular asset should be removed. Now here, what is the asset which we are removing? Depreciation of B vehicle. So B vehicle on 2019, out of this 11,000, they had 5,000 in 2019 depreciation. You all know that. And in 2019, we calculated 5,000 again. So 2018 5,000, 2019 5,000, altogether you are getting a value of 10,000 on 2019 and 2018 depreciation. And then for 2020 you are getting 1,250. So I'll plot it here, put it here for you to understand it clearly. In 2018, vehicle B depreciation was 5,000. 2019, vehicle B depreciation was 5,000, and 2020 vehicle B depreciation was 1,250. Now when I'm going to do a provision to depreciation sum, finalize it, I should remove this amount. So I should remove the entire amount. 5,000 plus 5,000 plus 1,250 will give me 11,250. So I'll record it on the debit side. 11,250 saying disposal. But when is the date I'm disposing? 31st March 2020 disposal. Now this disposal amount I should transfer directly to the disposal account. So it's easy for me to remember. So this 11,250 on the debit side means on the disposal account will become on the credit side. So I'll write 11,250. Always try to do the sums on the beginning itself, so you will remember it in a proper manner. So here also is 31st March 2020. You can write here what is the account? Provision for depreciation. Okay, as I'm getting more spaces, I'm just writing dip. Dip means depreciation. You can understand, I hope so. So now we are going to finalize this account. We have removed this disposal. So 11,250. So once I remove this off, I can get a value here. Total, the carry down balances. So here I'm getting 29,000. Yeah, 29,250. So I'm removing 11,250. I'll get carried down as 31st December 2020. Carried down is going to be 18,000. So the brought forward for 2021 January brought forward is going to be how much, guys? 18,000 only. What you are leaving there on the debit side should be transferred to the credit side. Saying how much? 18,000. Now after recording this provision for depreciation, we already understood how we got this value. So delivery vehicle and provision for depreciation comes to an end. So I'm going to show the entire view of what I was doing here on the sum. You can see here almost delivery vehicle and provision for depreciation account is completely done. Now we are going to do the disposal account. How are we going to do this? It's very easy. We are going to finalize this, the last part of the question. We know is it a profit or loss, but we need to know what is the amount we received in cash. So here you can see here 10,350 was received as check. So most probably you can consider it as bank. So bank account debit, disposal account will become credit. So this is also on that particular date. I can write the same date, 31st. Is that the same date they are selling? Yeah, they sold on 31st March. So right here, 31st March, then I'll write bank. 10,350. Actually, the debit side is higher than the credit side. That is one thing which we are noticing. So here you can see 11,250 plus 21,000. I mean 10,350 will give me a value of 21,600. So the loss is going to be 3,400. I'll write 25,000 both sides. And here I'll write 31st March, or no, you are sending this in the final value 20 is a loss, because this loss is shared to profit and loss account. So when you are taking here credit in profit and loss account, it will become a debit. So it's an expense, so it's a loss. That's how we consider. If you get a balance on the debit side of the disposal account, then in profit and loss account it will become a income. So it's a profit on disposal. Under other income we will consider. So I hope you guys understood this particular part. We'll move on to the last part of the question. If you don't understand disposal depreciation calculations, please watch the video which I have put it under the description of this video. So we'll move on to the last part of the question. What do we have? Simon's sister Yasmin is also in business and depreciates her delivery vehicles by reducing balance method. Simon is considering whether to apply reducing balance method of depreciation to his delivery vehicles. Advise Simon whether he should apply the reducing balance method of depreciation. Justify your answer. Speak pros and cons in both the methods. Speak about the straight line method. Speak about the reducing balance method. But at least try to give 4 to 5 points because the examiner is giving 5 points, and say which method is better. When you are speaking reducing balance method, 3 points, and straight line method 2 points, then of course given argument saying reducing balance method is the best one. If you are saying straight line method 3 points and reducing balance method 2 points, then say straight line method is the best method. So here I'll write reducing balance method I'll write here actually considers the real depreciation as depreciation. It doesn't take the same amount the every year. So that's what I'm trying to say. It doesn't calculate the same amount every year. Is one thing you can write. And also you can write reducing balance method okay, right? Reducing balance method application will be useful to use the non-current asset for a prolonged period. So you can use this type of asset for a long period. You don't want to stop using like after short term, like 5 years. In straight line method, you don't have that option. After the amount of depreciation, maybe 5 years or 6 years useful lifetime, you will go for another option. But also there's a concern, or you can say, but also every year real reducing balance method should be calculated. You can see, whereas same value applied every year in straight line method. Yeah, okay, right, but it doesn't give, realistic value. So these are things you can understand and write it. And also, the good thing, the same value is applying every year in straight line method. You can also use and same annual, like same calculations you are carrying it for every year. That is making your work much easier. These are the points you can. Another term you can say applying consistency. Like the same method is used, so it's very easy to calculate. You can use applying consistency in this type of method. So then you should advise finally, if Simon plans to use the asset for a non-current asset, or we can say use the delivery van for a longer period, reducing balance method is better. But if he needs consistency every year in same reductions, amount of reduction in depreciation, it's better to switch for straight line method. One request I'm asking from all my students: do not go and say from my idea, from my perspective, from my understanding. I will write, I will understand as per my knowledge. That's wrong. Always remember, based on the question, always use the case study's name Simon. Always use what type of machines they are using. So it is narrated to the case study which they are requesting. Here they are saying a story that Simon is thinking to use RBM or SLM. So you need to give an idea which is better. So I said reducing balance method actually considers the real depreciation. It doesn't calculate the same amount every year. Reducing balance method application will be useful to use the non-current asset for a prolonged period. But also every year reducing balance method should be calculated. Whereas the same value applies every year in straight line method, but it doesn't give realistic value. Applying consistency in this type of method can be seen. This is the reason I always read it to see if the answer is exact and accurate. And then finally, if Simon plans to use the delivery van for a longer period, reducing balance method is better. But if he needs consistency every year, in same amount of reduction in depreciation, it's better to switch for straight line method. Always give, you can go to this option or you can go to the other option. Hope you understood this entire video. If you really understand the video and you are understanding my explanation, please subscribe the channel and share to all your known friends that there's a channel called Commerce with Mac that they can study accounting, economics, business studies completely at free cost. And please specify what type of past papers I should put on the next video so I can start a new set of papers to be uploaded in my channel for you to view anytime. See you guys on another video. Thank you. Have a nice day.